Hi, once again, a very good evening to everyone here. My name is Ting Kang. I'm a IGM Senior Investment Advisor, and today we'll be talking on the topic of how SRS can be used to fund your retirement. At the end of today's session, we hope that you can understand what the whole SRS is about and how to make use of the SRS to save on taxes that you pay every year while working towards your retirement plan. I am going to give you all a quick introduction about iFAST Global Markets, otherwise known as IGM. We are the in-house wealth advisory arm of iFAST Corporation, and our mission statement is to help investors around the world invest globally and profitably. Currently, we have more than $1 billion in assets under advice. So why IGM? There are a number of reasons, including our strong research team, our strong compliance and investment solutions. Other than myself today, we will also be hearing from John. John has more than 4 years and he's a team director with us. So without further ado, let me dive into the topic. What is the supplementary retirement scheme? Basically, before I really go into the topic of SRS, I believe most of you also know about CPF. So what's the difference between CPF and SRS? CPF is something that's mandatory. So like it or not, all of us are currently contributing to CPF. And for CPF, while the initial intention of CPF is also retirement, CPF can also now be used for housing purposes as well as for medical purposes. So the retirement portion is actually not the entire part of CPF. So this SRS scheme is actually a voluntary scheme where it's basically used to encourage individuals to save for retirement over and above their CPF savings. So I will say that the CPF portion serves as a very good first building block towards your retirement, while the supplementary retirement scheme is really an add-on in a sense. So if we were to think of it this way, for Singaporeans, basically for CPF contributions is capped at $6,000 per month. What that means is that whether you're making $6,000 a month or $20,000 per month, your CPF contribution will be the same. What that means is also that for somebody that's making much more, and you can probably infer that this person also will require more for their retirement. And that is when this SRS really comes in very useful. So there's a sweetener to use the SRS, and that is contributions to a SRS are eligible for tax relief. I'll elaborate more on that in a while. And on the last point, investment returns are tax-free before withdrawal. Only 50% of withdrawals from SRS are taxable at retirement. Again, quite a mouthful. I will elaborate more on that through an illustration later on. So eligibility criteria, basically anyone that's working in Singapore, be it you're a citizen or a PR or a foreigner who derive income from Singapore, you can make use of this SRS as long as you meet the following 4 criteria: at least 18 years old, not undischarged bankrupt, not suffering from mental disorder, capable of managing yourself. Okay, now I'll dive right into what are the main benefits of using SRS. So on the first row over here, you can see this contribution cap. For Singaporeans and PR, this cap is at $15,300. Whereas for foreigners, this cap is at $35,700. For this contribution cap is basically the maximum that you can contribute towards your SRS per year. Okay, so you can contribute between 0 to 15,300 every single year. Why do you want to do that? It's mainly for tax savings. I have run some examples down here. So if you are having an annual salary of say $60,000 per year, based on our example, you can save roughly $700 in tax savings if you contribute this 15,300. So that is what you save in taxes. Again, for you'll realize that the higher your annual salary is, again, the more tax savings you'll get to enjoy. In this case, if you are in our example here, if you're making a salary of 200,000 per annum, you can stand to save more than $2,000 in tax savings. I want to elaborate that for taxes, because it depends on each and every one of our unique situation. Do we have children, etc.? How much income income relief we have. So it will differ from person to person. You can go to IRA's website, download the calculator, and from there you can see how much you'll be paying with and without contributing to SRS. And from there you can really deduce how much you get to save. But generally for people who are making 100,000, you will definitely see about $1,000 or so in tax savings in most cases. Well, now for foreigners, the contribution cap is significantly higher at 35,700, and consequentially, for the higher income earners, they can save as much as $6,000 in annual taxes. So for the withdrawal portion, unlike the CPF, you can actually withdraw funds from SRS any point of time. The only caveat is there will be a 5% penalty for early withdrawal. I will go on to show you some examples. So early withdrawal, this is what most people who contribute to SRS are fearful of. For instance, in the event of a loss of job. That's my example one. So in example one, member A got retrenched at age 55. He had been contributing to SRS, has more than $200,000 in SRS, and decided that he need to withdraw some money for his day-to-day expenses, $30,000 in this case. So this is a classic example of somebody who is doing an early withdrawal and will get a penalty. In this case, you'll get a penalty of 5% of $30,000, which is 1,500. Okay. I want to go on to a second part, which is income taxes. So this 30,000 that you withdraw is also subject to income taxes. Based on standard calculation, it'll work out to as much as $200. So in total, in this case, for withdrawing 30,000, you will actually get a total taxes of about 1,700. I want to emphasize that at the point of contributing 30,000, which is roughly 2 years of cap, right? You potentially have saved more than $2,000 in taxes. So frankly, although it in black and white is a penalty, but strictly speaking, you probably still stand to gain. So I don't think it's that scary in that sense. So you do have this flexibility of early withdrawal. Well, in a second example, this is withdrawal at 62 years old. That is the statutory requirement retirement age. And this is the classic example of how somebody should actually make use of their SRS. So member B in this example, he's 62 years old, has saved up 400,000 in his SRS account over probably a long period of time. So the ideal way to do that is to draw down $40,000 per year over 10 years. Okay, in this case, there is no penalty whatsoever, not applicable. And when it comes to income taxes, remember 2 slides ago, I show you over here, only 50% of withdrawal sum will be taxed if criteria is met upon retirement age. Okay, so I come back to this. So for withdrawing 40,000, your applicable income taxes is 20,000. And since the first 20,000 of income is not subjected to tax locally in Singapore, so you will effectively be drawing down 40,000 per annum and paying 0 taxes all the way. What that also means is that your entire 400,000 while contributing, you probably have saved for 20 years of more than 1,000 per year in taxes. That will work out to maybe $20 over $1,000. Again, depending on individual situation. But this is the classic case of how you should make use of the SRS. Okay, my third example is somebody that is late retirement. So SRS is there's a mistaken belief that SRS is for someone who is younger. In reality, the older you are to retirement, actually, I find that SRS can be a even better tool. Why? So in this case, if members see you're 60 years old and you decide to start using the SRS, still working, let's just say this person is a hawker or something. So he's going to work until 70 years old. And you might have contributed for 10 years of 15,300. In this case, this is your own contribution, your own savings. If you want to withdraw 51,000 per year over 3 years, number one, there's no penalty. Why? Because you're withdrawing after 62. And in terms of applicable income taxes, you can see that even though this person is withdrawing 51,000 per year, the actual taxes paid is very minimal. It's just like 110 per year for 3 years. So On the contrary, this person would probably have saved more than 1,200 per year over the past 10 years, which is 12,000. And I would say that SRS, the main benefit, the main idea over here is to really make use of it to save for tax, save in terms of taxes. To me, every dollar that you save here is a dollar earned. So I want to take a while to talk about why starting SRS now is a good idea. The main reason is because right now the statutory retirement age is 62. And the rule is such that people who start their first SRS contribution, that is you kind of lock in the retirement age at that point of time. So if you were to start this year, the withdrawal age will be fixed at 62. Whereas there are some fixed plans, I think as early as next year, they will be raising this statutory retirement age. So eventually, if you were to start 3 years or 5 years down the road, you might be only able to withdraw at 65. So I think that generally it's a very good idea to start your first SRS contribution. Even if you think you're not ready, you can actually still open an account, put in $1, that will count. So I think that that's the best course of action if you decide to plan for retirement using SRS at any point of time. Okay, over here I'm going to do a case study of somebody who is 40 years old, deciding to start their SRS, contributing the cap at 15,300 each year until age 62. So in this case, this person will have saved for 22 years. In terms of actual amount that they have contributed, that works out to 336,000. Okay. Now, again, that is assuming you don't do anything with the money, you leave it in a bank account, but that is definitely, again, not what I would recommend because I think that you should always put your money to work, especially if you have such a long time horizon. So if you were to invest it at 4%, you will see this amount grow to something like 544,000. And again, if you were to take up a higher kind of risk, trying to go for more returns at 8%, you will see this amount grow to 900 over 1,000. Now I will say that this amounts are looking more like a serious retirement fund. So definitely start early and work to make sure that they are invested and working hard for you. Right now, I will give a conclusion on my portion. Basically, the higher your income, you will realize that the more you get to benefit because you already get to save a significant portion in income taxes. Conclusion number 2 is that if you are already planning towards retirement yourself, every year you are already saving, be it $5,000 or $15,000, etc., you should definitely consider using the SRS because of the tax benefits. Well, again, if you have not started planning, maybe you should start when your circumstances allow. I want to highlight this last point as well. There are instances where the SRS does not make sense for some people, and that is when your personal relief is already capped at $80,000. Well, in my experience, the kind of clients that I come across that have this personal relief cap will be generally married ladies with young children. So if they have a few children, their personal relief tends to be quite high. So again, case on case basis, you can download the iFAST tax calculator. I will send it in the chat later so that all of you can download it and play with it. Okay, on this portion onwards, I'm going to let John do the sharing. John, over to you, please.
Hi everyone, thanks for joining us this evening for the webinar. I think to add on to what Ting Kang actually said is that he's right to say that there are people who probably can make use of SRS. There might be a part of people who has sort of maxed out their reliefs, and then it might not make sense. But importantly, look at what you can probably play around with the calculator. After punching in all the reliefs, look at where your income bracket is. The most important thing about SRS is that the amount that they are contributing to SRS is going to be tax deductible. So that might be a case that it might bring you down to the lower tax bracket. I think that's where the savings, the cost savings come to you, because ultimately whatever you're paying to taxes doesn't go, it wouldn't come back to you. It's basically going to be sunk cost. So I always like to always let my client know that SRS is actually another pot of savings on top of your cash and your CPF. I think it's an account that's very neglected. A lot of people hasn't really been looking at it, and even for people who has been contributing to SRS might basically just by keeping the money in SRS as cash. So for SRS, I think there's only 3 local banks in Singapore that allows you to open the account. And I think because of COVID, it sped up a lot of this account opening process. And basically the 3 local banks allows you guys to really open the account online. I'm also sharing the link to everyone via the chat. These are the links to the 3 local banks. If let's say you are keen to open the account, basically you can just follow the steps through, and basically I think it's pretty seamless. For investing via SRS, it's pretty simple, whereby even if you're investing into certain instruments, basically the cash will be deducted from the respective account. But just take note that I think the contribution has to be done before the end of the year to qualify for the tax reliefs. So what can you invest via your SRS? You could basically just leave it as cash, like what I said, and I think the interest that the bank pays you will be at 0.05%. Or banks will allow you to even put it at fixed deposit. I think the highest fixed deposit at the moment is about probably 0.5, 0.6 per annum. Didn't really follow it too recently. There are things like Singapore savings bonds. If you are very, very risk adverse, you can look at that, which could potentially get you some returns. Or most of Singaporeans would know that you can even trade it through the SGX shares. For iFAST itself, basically we cover shares. We even cover things like ETFs. That means you can invest into SGX listed ETFs, index funds, or even through the unit trust that's on the SRS approved list. So for iFAST, I mean, we have a pretty unique instrument that's outside what we have been seeing just now, because ultimately for most investments, if you have experience in investing in shares, in funds, I think the essential thing is that sometimes most of you who are working might not have the bandwidth, the time, the energy to sometimes look at your portfolio on a day-to-day basis. So we have actually in iFAST, we have launched something called the DPMS. It's basically called the iFAST Discretionary Portfolio Management Solutions for short. What it is basically an investment service that we basically build the portfolio for you. And the important thing is that it's fast fee, right? So the portfolio is monitored on a daily basis, whereby we do the rebalancing for you from time to time, depending on certain situation, certain market environment. And basically we try to invest into places that we think that are attractive or undervalued. And most importantly, it's low cost. So how does DPMS work? If you look at the GIF I have on the screen, you can look at it probably from 2012 to 2018. The highlighted parts are a certain sector. So the essential thing that we observe is that no certain sector or geography stays constant throughout the years. I mean, I think it's jammed up at Japan, right? So if you look at Japan, it's doing well in 2012, 2013, 2014, even 15. Then subsequently in 2016 and 17 and 18, it starts to fall back in the markets. And other markets, things like, for instance, US equity starts to pick up. So I mean, if let's say we are passive investors and we buy into certain funds, the only thing sometimes we do is that we hold, right? And we hold for a certain period, and we have no idea when the market's going to turn. So essentially, sometimes when we open up our portfolio and find out, hey, why am I down when the market's up? So essentially, the part is that because you wouldn't have that sort of bandwidth to really look at it on a daily basis, and hence I think that's what DPMS is ready for. So essentially, we look at the markets pretty closely on a daily basis. We look at where we like and where the outlook for a certain macro, certain geography is going to be sort of attractive for the next couple of years. And that's where we do the allocation accordingly. So how do we actually do it? Next slide, thanks. So first of all, it's the system, if you have understand from what we have in the market, there's things like the robo-advisors, which are very sort of popular right now. Instead of just relying everything on a black box of algorithms, basically the system that we have here, DPMS, is managed by a group of sort of very experienced portfolio managers and analysts. So essentially, they have the access to the instruments that we have within iFAST. So I think at the moment we carry about 1,700 funds. And for example, just by China itself, there's already 53 funds that invest into China. So as an investor, how do I look for the best fund to invest in, right? So the investment team basically looks at, right, do we like China? How is China going to do? How's China is going to look like for the next couple of years? If China is something that we like, then which are the funds that we want in terms of selection, like Sharpe ratio, or in terms of the performance, the consistency of the fund manager over the years, which are the fund that we would want to put our money in for the China fund. So that's where we do the certain selection. And then it becomes a very much of a holistic portfolio, which means that we have exposure towards US, we have exposure towards emerging markets, Europe, Asia, sometimes probably even tactical positions, etc., etc. And then we do the overweight and underweighting on an ongoing basis. So it's more of a one-size-fit-all kind of instrument. But with that, I say that because different clients, again, you have different risk profile. Someone who is probably younger said that, you know, I have time to wait. I have time in the market. And as such, I want to be more aggressive. Versus someone probably who started on a later, who started SRS probably or investing on the later years, who says that, you know, I can't take that much risk. You know, I probably prefer to stay a bit on a more of a balanced defensive side. So we hear that, and basically DPMS basically breaks ourselves into, we sort of have portfolios for different set of clients. So essentially there's 5 of them, from conservative all the way to aggressive. I'm sorry, the slide moved. Okay, thanks. Yeah, so from conservative to aggressive, but I'm just taking a snapshot out from a few portfolios that we have. So if you look at someone being conservative, the portfolio has actually done 3.54% per annum, right, since inception. And versus someone who's on the balance side, we are still doing about 7.45. That's really actually not too bad from a defensive point of view. And moderately aggressive will be about 9.73, and then aggressive being 10.78% per annum since inception. So what actually we are trying to say here is that, you know, the pot of money on SRS tend to be a bit more passive, whereby, you know, I'm saving on a yearly basis. I want to hope that my money actually can grow on a gradual, controlled environment, whereby I do not really have to monitor too much. I just leave it in there, contribute my yearly SRS contribution, save on my taxes, and hopefully with that kind of return that's going to be compounded, we should be able to sort of grow the money that we have saved over the years to an X amount that actually becomes one of your pot of your retirement. So the part of SRS is about saving, contributing 15,300. We are saving about maybe 1,002 to 1,005 in taxes, yes. But actually, if you look at it, you're actually saving the full 15,300 if you're doing the full contribution, and that's about 1,002 of contribution a month as part of your 4 savings. So, in short, this is what we have on DPMS. It's probably an instrument that you don't really look at, that's so common outside, because end of the day, it's an instrument that has been sort of created by iFAST ourselves. So I think with that, I will probably end it right here. But if you do have any questions, you can feel free to contact us. Personally, this is Ting Kang's and my personal phone number. Just shoot us some messages. We'll try to address as much as we can. I think we can have more information that we can sort of blast it on the chat as well, for you to do some further reading.
If not, that's all. Thank you very much once again.
Thank you, everyone. Good night.
Good night.